Hey everyone, it's Evan back with another video, and this time I want to tell you a little bit about my decision to purchase a Tesla Model Y back in November of 2023 and how to get that $7,500 tax credit. So we're going to go through a few different sections in today's video. First of all, I'm going to quickly walk you through the economics of my Tesla purchase, in particular how the cost of the vehicle broke down and how that compares to the $7,500 tax credit. We're also going to talk about tax brackets and eligibility to get a better feel for, okay, what does my income have to look like to even make this work? Because if your income is too low, you're not going to be able to make use of the full $7,500. And if your income is too high, you may be ineligible for the credit altogether. So we'll look a little bit at that. From there, we'll just briefly look through the different forms that are required. I am not a tax expert. Full disclosure, TurboTax is handling all of this for me. But I did look around online a little bit and find the specific forms that are required to get the rebate if you were preparing your taxes by yourself. So without further ado, let's jump into the economics of my Tesla purchase last year. All right, so let's take a look at just how the economics of this purchase break down with and without the tax credit that we're talking about. So I went with the Model Y long range. The base price, according to the receipt, was $48,990. I went with black paint, so that added a little bit, as well as a 7-seat interior. And so all told, that subtotal was up around 53.5. Now, there's a few other fees and whatnot that they tack on. So there's this destination fee based on where I decided to pick it up from. There's this order fee, and then a price adjustment, which I think is just to make sure that the sum total of all this itemization works out to the total package price that was displayed to me on the website. I don't exactly have clarity on what that that negative 2670 is all about. But anyway, after all of those various fees and the price adjustment, we're down about $1,000 to 52.5. So 52.5, I mean, that's not cheap, at least not with the kind of money that I make at this point. That's an expensive car as far as I'm concerned. However, the $7,500 is super helpful. All of a sudden, a $52,500 car drops to a $45,000 car, so that's not nothing. That's 14.3% of that all-up purchase price is knocked off by the rebate. So, pretty good deal. Let's talk about eligibility and how exactly to get the rebate. All right, so here's the page on the IRS website that goes through the details of the clean vehicle tax credit and eligibility. So let's scroll through this briefly, and then I want to actually put some real numbers to some of this. First of all, the credit is up to $7,500, and it will depend on a few different characteristics of the EV. So not everybody would qualify for that full $7,500 amount, but there are ways to figure out what amount you would qualify for. It'll show those below. I'm going to focus on the married filing jointly numbers because that's my tax situation. AGI must not exceed $300,000 for couples, married couples filing jointly. So $300,000 if and when you are above that number for your AGI, you're not going to be eligible for the $7,500 credit. And there's some different stipulations based on when you purchased the vehicle, or placed the vehicle into service, I should say. So if it's on or before April 17th of last year, 2023, then it's calculated based on a base amount, and then it further varies based on battery capacity. And so basically 417 is a special number because that's 5,000 divided by 12. So it kind of ratchets up in increments of 12 from that $2,500 base amount all the way up to the $7,500 total that's possible. And then on or after April 18th, 2023, they simplified it and just said, okay, there's a critical minerals requirement and there's a battery components requirement. Now, your car manufacturer will tell you what your car qualifies for, so you don't have to really do too much figuring on all of that. So again, I said I'd focus on married filing jointly numbers. Here is a schedule or a table of tax rates based on AGI for those filing jointly. And so I want to kind of look at like what would it take to claim the full $7,500 benefit. Obviously, if you make more than $300,000 as married filing jointly, well, you're out of luck. You can't qualify anyway. But there are some situations at the lower end of the income range where you wouldn't actually be able to take advantage of the full credit. You can't apply it to a future year or anything like that. You use it in that year or you don't. And so the question I wanted to answer is, how much money would I have to make in my tax situation to fully make use of that credit? So in row number 3, from $22,000 to around $90,000, the effective tax rate is 12%. So if we take 7,500 and we divide that by 12%, that tells us that to make use of that full amount, you'd have to make $62,500. Let's check that math. $62,500 times 12% would help if I had an equal sign in the cell. Let's go and do that. $7,500. Cool. So anything below that 62500 number for income, you're unfortunately going to leave money on the table because you won't be able to claim that full tax credit, as your tax burden actually wouldn't be high enough. So hopefully this table is helpful. Obviously, if your tax situation is a little bit different from mine in terms of how you're filing, that will differ, but I have left all links to these IRS web pages in the description below, so check out. So this is where the rubber meets the road, no pun intended. Form 8936. If you want Uncle Sam to hand you back some of your hard-earned shekels, then you're going to need to fill out Form 8936 to get the tax credit. Now, I will say I'm not an expert in this domain. I let TurboTax do as much of my taxes as I can possibly let them do, and I don't have to think about it too much other than just spitting out a bunch of information inside the TurboTax platform. So I'm not going to be filling this form out myself. I'm going to just do what they tell me to do. But if you find yourself preparing your own taxes from scratch, then hopefully this part will be beneficial. So Form 8936, first of all, you're going to calculate in Part 1 a modified AGI. This will likely resemble the AGI that you calculated on Form 1040, but there are a few modifications. You can see lines B through E. We'll tweak that AGI and modify it slightly. And then for all of us who are trying to get a credit for personal use of new clean vehicles, you'd skip right down to Part 3 after completing Part 1. And you'll notice on line 9 here, it says, oh, you need to figure out a total credit amount on Schedule A. So let's go look at Schedule A, because this is where a lot of the magic happens when it comes to calculating that nice $7,500 number. So I'm not going to step through every bit of this, but I will have a link in the description below. Effectively, you're answering some questions about your vehicle: year, make, model, VIN, the date that it was placed into service. Make sure that this date matches the date that's on your paperwork from whoever you purchased the vehicle from. Then some qualifying questions where you can see, for example, question 4, was the vehicle used primarily outside the United States? If you answer yes, stop here. You can't claim the credit. So there's a few of these hoops to jump through, make sure that you qualify, and then finally you can go ahead down here and figure out exactly what the credit amount is going to be for you. So in addition to Form 8936, you're going to need to supplement that with Schedule A. Well, thank you so much for watching. I hope this was interesting, perhaps even informative. If you enjoy the content and you want to see more Tesla content in the future, please drop a like, a comment, subscribe. All of these metrics help, and I track and appreciate every single one of them. So, yeah, I hope you learned something today, and I'll see you next time. Thanks.